What if the most important AI infrastructure in crypto is trading at all-time lows, while almost nobody is watching? On May 14th, the graph went live, indexing every ERC 8004 agent across 5 major chains. Meanwhile, GRT is sitting at 2 cents, pressing against the last support before zero. So here's the question I want you holding for the next minutes. Is this the silent bottom that hedge funds are quietly stalking? Or the final breakdown before this token disappears? Stay with me. The data tells a story most retail traders are missing. We're not in a normal market. Bitcoin is deciding whether it can hold its 55 exponential moving average on the daily. The AI narrative has rotated 3 times this year, and protocols with real product are being punished for the sin of being early. The graph is the perfect example. The infrastructure thesis hasn't changed. If anything, it's stronger. But price has spent 18 months grinding lower, while the team quietly shipped what may be the most important pivot in protocol history. So, before we touch the chart, let me show you what almost nobody is talking about. Because the fundamentals are shifting in a way that completely changes the calculation. For 5 years, the graph was the boring, reliable indexing layer of crypto. Builders used it. Holders waited. Then this year, 2 things happened that reframed the entire asset. First, the Agent0 Subgraphs went live across Base, BNB Chain, Ethereum, Monad, and Polygon. Real-time indexing for every ERC 8004 agent. Identity, capabilities, reputation, validation. This is the data layer the entire autonomous agent economy is going to run on. There are already more than 15,000 subgraphs deployed across dozens of supported chains. That's a moat no competitor can replicate quickly. Second, the subgraph gateway now accepts X402 payments. Let me explain what that means. Querying the graph used to require an account and an API key. That works for apps. It doesn't work for autonomous AI agents that spin up, query, and disappear in seconds. With X402, the agent hits the endpoint, gets a 402 response with the price, signs a USDC payment on Base, and pulls the data. One round trip. Payment is the authentication. No accounts, no keys. Most analysts stop here and shout, AI Catalyst, buy GRT. But read the fine print. The settlement is in USDC on Base, not in GRT. The graph just built the most elegant agent payment rail in crypto and routed it around its own token. That's the contrarian risk you have to price in carefully. Now here's the twist. The protocol's economics are actually improving fast. Token terminal data shows trailing 6-month earnings at negative $1 million. The headline is ugly. The trajectory is the alpha. Through November and December of 2025, the protocol was burning $300,000 to $400,000 per week. From January 2026 onward, that burn collapsed to nearly zero. The graph is operating at break-even right now. Expenses dropped from over $1 million per quarter to almost nothing, which means indexer reward emissions have been throttled hard. Less GRT being printed and sold into the market. Structurally lower supply pressure on spot. Revenue is the show-me part of the thesis. $67,000 over 180 days. Market share of 0.1% in the infrastructure category. For context, the category leader did $64 million in the same window. That's a 960x gap. Real risk. But weekly revenue has stabilized around $7,000. There's a floor, just a very low one. The bet is that Agent0 and X402 expand that floor materially over the next 2 to 3 quarters. One last data point that matters. Core developers dropped from 27 to 21 over the last 6 months. That's a 22% contraction while shipping the biggest pivot in protocol history. Either the team is leaner and more focused, or talent is leaving quietly. Either way, execution risk is elevated. Keep your eye on that variable. But fundamentals are only half the story. The chart is telling us something different. Let's go to the weekly chart. Zoom out. GRT is at roughly 2 cents, below the 21 exponential moving average in red and below the 55 in purple. Bearish on the surface. But here's where it gets interesting. Price is inside a falling wedge that formed at the end of 2024, drawn in white dotted lines. We're testing the lower boundary of that wedge right now, and that lower boundary lines up almost perfectly with the 1618 Fibonacci extension at 2.3 cents. That fib is anchored from the 2023 low at 7 cents up to the 2024 high at 50 cents. Here's the part most chartists miss. The same 1618 extension caught the bottom of the previous cycle. From 2021 to 2023, GRT printed an identical falling wedge. The pullback ended exactly at the 1618. Then the breakout produced a 600% expansion. I'm not predicting the same magnitude, but the geometry is identical. The market has memory. The Fibonacci Relative Strength Index at the bottom of the screen tells the same story from a different angle. It bounced from extreme oversold and is pointing up. And inside the indicator itself, the same falling wedge appears, drawn in matching white dots. That wedge has already broken to the upside on the indicator. Momentum is leading price. That's a classic precursor to a price action breakout. Above us, the resistance map is clear. First level is 5 cents, then 7 cents, then 15 cents, which sits exactly on the macro descending trend line from the all-time high near $2 in 2021, drawn in orange dots. That trend line rejected price in late 2021 and twice in 2024. If GRT can punch through, the next targets stack at 25 cents and 50 cents. But none of this matters if the floor breaks. The green box at the 1618 is my strategic accumulation zone. The invalidation level is a weekly candle closing below it. That's where the thesis dies. Layer the liquidation heat map on top. Two heavy clusters, one above price at 3 cents, another heavier, below at 2.2 cents. If Bitcoin holds its 55 exponential moving average on the daily, the upper cluster becomes a magnet and we get a short squeeze. If Bitcoin loses that EMA, the lower cluster gets hunted first. The whales know exactly where the leveraged positions are stacked. My plan is straightforward. Strategic small accumulations inside the green box, trailing stops on the way up. If the first target at 5 cents prints, my stop moves to entry. If 7 cents prints, the stop moves to 5. Scale out at 15, 25, and 50 cents. I might trim partials between these levels depending on momentum. I'm not de-risking my long-term bag during peak fear. That's the discipline. So let me synthesize this. The bull case. The graph is the foundational data layer for the AI agent economy. Expense burn has collapsed. Supply pressure is easing. Derivatives positioning is short into a bullish technical setup. If Bitcoin cooperates, the geometry is asymmetric. The bear case. Revenue is microscopic. Developer count is shrinking. And the contrarian risk almost nobody is pricing in. X402 settles in USDC on base, not GRT. If agent adoption explodes without tokenomics routing value back to the token, the protocol wins and the token languishes. For anyone holding Ethereum who wants to compound yield while keeping GRT exposure, the wrapped Ethereum GRT pool on Uniswap on Arbitrum is the best venue I'm tracking right now. Current APY is 29%. 30-day average is 32%. Liquidity is thin, so size accordingly and respect impermanent loss. It's a yield enhancer, not a core position. Timeline. I'm thinking in quarters, not weeks. A move toward 15 cents by late 2026 is plausible if Bitcoin stays risk-on and the wedge breaks cleanly. Below the green box invalidates everything. So here's where I land. The graph is at all-time lows with improving unit economics, a real moat in 15,000 subgraphs, and a clean technical setup at the 1618 fib. The risk is real. The reward, if Bitcoin and the AI narrative cooperate, is highly asymmetric. This is one of my long-term AI plays, a patient one. If this analysis added value, please, don't forget to hit the like button and subscribe. Now, for anyone who wants the exact execution in real time, my entries, my trailing stops, my portfolio weight, the Sunday prep reports, and the weekly live strategy calls, that lives inside the Pro Capital Vault on Discord, through the YouTube members tier of this channel. Click the join button below the video, scan the QR code on screen, or use the link in the pinned comment. Once you're in, just sync your YouTube account to Discord, and every private channel unlocks automatically. I've made more than 10 videos on the graph by now, and each one builds on the last. The previous one is on screen for the full backstory. None of this is financial advice, just my thesis and my positioning. Much love for watching, and I'll see you in the next one.